welcome back to another episode of Banking Bytes. This is episode 4. You have Fred Fuller here and my counterpart, Mr. Matt Williamson. He's the big brain on the show. Matt, how are you, sir?
I'm very good, thank you. Slightly disturbed by your choice of cardigan, but other than that, we're all good.
Did you mention Werther's?
Yes, Werther's Originals. I hope that translates to the European market, but I think for the UK and US, Pop or Grandpa wearing his lovely cardigan is just the look we're going for. Warm and fuzzy.
Well, we ought to see if we can get some endorsements.
That's true.
Right? And like a lifetime supply of Werther's. Like, that's not horrible.
It's not the worst thing in the world. Well, let's speak to PR and see what we can do.
Okay, what are we doing right now? Are we you want to do an episode, or you want to talk about cardigans?
Cardigans is a good start, but no. So this is a bit of a different one for us. So we are recording an intro to an episode that I recorded live at MoneyLive about a month ago on March 10th, where I was part of a fireside chat with Michael Knetsch from Deutsche Bank and Cristian Cengher from Erste Bank. And we were talking about the instant payment mandate and the strategic implications involved in that. And a large part of that is hanging around the October 9th drop dead date that has been mandated, that people have to be able to, can only use ISO 222 format. Previous MT format won't be accepted. And we discussed, are people going to be ready? What are the implications of that for both UK, Europe, and further, and beyond? So I think with that, we can roll into it.
Yeah, let's give it a listen. This is exciting.
Hi, welcome to Banking Bytes from Indava. I'm on my own today. Unfortunately, Fred couldn't be here, but we're live at MoneyLive. I've just finished doing a session in one of the plenaries. And with me, I have two fantastic speakers. We've just talked about the instant payment mandate and the strategic implications. So I'll hand over to my left, my colleague from Erste.
My name is Cristian Cengher. I'm head of payments operation and clearing at Erste Group Bank, a bank operating in Central and East Europe.
I'm Mike Knetsch, working at Deutsche Bank, global head of instant payments or tribe lead of instant payments. So ensuring that we do instant payments in every country where we operate.
Fantastic. So we've just come off the panel, which went really well. And we've had some people stop by and actually give us feedback on how well it went. One of the things that I took from it that I think we all agreed on was the risks around the drop dead date of October and basically how people may not be ready. I'll start with yourself, Michael. What are the challenges you're seeing? So obviously, the people that listen to this didn't see the panel, so they're going to need you to explain it again.
No, perfect. So I think the European Commission was set out on a journey a couple of years back to basically, under also the G20, right, instant cross-border kind of desires that they have, to set out the instant payment regulation, to set the payments as a new normal. And with that, right, they put a couple of requirements together so that every bank in Europe can do instant payments and in a certain time put VOP on top, right, so verification of payee. But when we're doing that, they set timelines that are quite challenging. And I think also they set a couple of requirements that, could work in certain use cases, but not in all use cases where we service payments. So my biggest risk at the moment is that with the regulation and us banks trying to comply in full, we will, I'll say that right, it will risk the client experience of the instant payment. So we have more rejections and more friction to customers. So I see that as the biggest risk. And we can maybe name a couple of really good examples to demonstrate that.
Yeah, Cristian, over to you.
Well, we have to take a look because it's not only one kind of risk. We are talking about many types of risk. First of risk, of course, is not meaning to reach the regulatory requirements. Second risk is the operational and business risk. Whenever you cannot fulfill on a daily basis on the run the bank anything which is requested on the 10 seconds. And the third one, we are talking about the infrastructure risk. You have to be 24/7 available. And for any single hiccup, you have to ensure that you have all the people, processes, and system, a backup system and all. So there are a lot of risks coming out of this regulation, which were not foreseen as big as really are when the regulation was published by the regulator.
Yeah, and Michael, you and I were talking about it just off camera beforehand, in that we agreed that the regulators have to set these mandates and these timelines to ensure it happens. Otherwise, things will just continuously, they just won't happen unless there's a mandate. But there has to be an evolution involved in that, and almost a critical feedback loop to explain. So the example you gave earlier, the 10-second rule. If the payment doesn't happen within 10 seconds, it could be 1 millisecond over, but it's rejected, which doesn't help the customer in any way, shape, or form. So should there be a small margin around that? Because nothing is wrong with the payment except this 1 millisecond rule. So is there a forum for yourselves to go to the regulators to discuss this, or is that just not available really?
Yeah, of course there are ways, right, that we are discussing that. First of all, as industry, so around, right, the clearing houses, there are communities that are discussing this within communities, right? Every country is discussing these items on their own. Often the central bank is present in those discussions as well. That's also the challenge of Europe, that all communities, right, form their own opinion, interpret the regulation, and sometimes there's a difference between that interpretation. So that starts, right, already the confusion, because most of, especially our corporate customers, they operate in many countries. So you cannot have that there are differences, right, and how we treat our customers. So that's one challenge. So yes, there are openings to discuss this with the regulator, but the challenge is that the European Commission that set this regulation will not change anything, right? That's a given. Deadlines, the scope, that's all a given, because it's even by the previous parliament decided upon. So we have to speak with our central banks to agree, what are the things we want to do, and what are the things where we have, let's call it, room to maneuver, to ensure that the client experience and the infrastructure in the end is stable and consistent. And I think that's the main challenge.
Okay, and we talked about VOP as well. So for our audience, what is firstly the rationale behind VOP? And then if you don't have that, what is going to be the outcome for the banks on the end? Do you have to have VOP, or is there some wiggle room within it? And what are the ramifications behind it if you don't have it?
So verification of VOP reasoning is clear to reduce the fraud. They were noticed a lot of high increase in the instant payments frauds, and this is what they want to solve. There's no discussion that you have to do it, so the regulation is quite clear. For every single payment, you have to do verification of pay. There are discussion around the verification of pay for the bulk payments, which unfortunately sometimes is misinterpreted or differently interpreted by different communities or even by different banks. And you mentioned before the milliseconds and the 10 seconds. The issue is that it's not 10 seconds. If we cannot solve it in 1 millisecond, we will not be able to solve it in 10 seconds. So regarding verification of pay, whenever you receive a bulk payment or a request for a verification of pay for a customer, for a corporate customer, but through a channel which is not an electronic channel, which does not allow that the file is signed already, that basically you're put in the position to execute a verification. You give to the customer back the response, and he has no possibility to react on your response. Because this is exactly what verification of pay requires. You verify the beneficiary account and correctness of the data. You give it back to your own customer, and customer, having this information is no match, partial match, or remote match, he decides to execute or not to execute the payment. And in case of the bulk payments, there's a huge issue on the let's say, net banking channels to really offer to the customer this possibility fast in 1 second, milliseconds, 10 seconds to approve the payment.
Yeah, understood. But I think in general, if you look at the instant payment regulation, because I like how, for instance, in the UK, they make a difference between attended channels and unattended channels, meaning where somebody is waiting on the result of the payment, or where the payment is scheduled or sent by paper to the bank. Unfortunately, in the instant payment regulation, they have made no difference between those channels. Okay. So meaning you have to do a VOP also for an API, and that's really challenging. But also the 10 seconds. You could argue for a batch payment or a payment, right? Even paper-based payment that we receive at the bank after 3 days through the mail. Still have the obligation to then process within 10 seconds on instant payments. Right, your infrastructure to process instant payments, the true instant payments, and that's called the non-time critical, non-true instant payments. There's no distinction between that at the moment, which makes it another challenge.
Absolutely, and that also then leads into real-time settlement. So
everything is
24/7 real-time settlement, but as we know, banks operate Monday to Friday, not over weekends. So we see there are challenges around that, and how are you going to address that?
Oh yeah, You've heard?
Well, actually, to be honest, there's no such thing as 24/7 settlement. That's currently in the bank does not exist. So basically, what is happening also today, whoever have instant payment, we execute the payment instantly, of course. However, the booking and the settlement is done on the next working day. And this is what will also happen with the instant payment on the global level, on the European level, because the national banks are not using the 24/7 settlement. You're using the DCA, the cash account from the national banks in order to fund the respective accounts to the TIPS or to the RT1. So for the moment, I do not see a possibility or a benefit compared with the current situation in order to really implement a 24 settlement, which will really help the companies, not only the banks, to use this functionality.
Yeah, in relation to this, right? So the usage of liquidity will increase. So we have to maintain a higher balance on our real-time 24/7 available account, which means that today we have the overnight deposits. So the amount of money we can put overnight, so to speak, and don't need are declining, whereas our money that we use 24/7 is increasing. So that really impacts in the end our bottom line. So that's really an issue.
Absolutely.
Yeah.
So bearing that in mind, does that not give the use case to move to 24/7 settlement? Is that an area where the banks could say, look, this come together and say this is impacting our bottom line, surely we need to shift to this?
Yes,
share the weight.
You're totally right, but we have to change it up the whole infrastructure on the national banks, because you do not have the possibility during the weekend and non-working days to connect to the account in order to make this kind of transfer. So we as a bank, of course, we are kind of ready there, because of course on the business side, I do not recall any bank which is not global to have 24/7 function people working on it. So basically you have to also ensure that the colleagues in treasury are available at the bank. But now we are going a little bit further, because you have to change the working legislation in the respective country, because the working legislation does not allow you to work on the weekend if you do not have to offer 24/7 services. So definitely the direction is the good one. However, it's a long run in order to reach one, and a lot of changes have to happen not only on the bank side, but on all different categories or actors of the market.
Agree, right? Concept of business day or even value date.
Yes.
With instant, you could argue it doesn't really matter. It's calendar day, right? Or it's calendar. Maybe you have to go to time-based even, right? When you think about liquidity shifts.
Yep.
It's not only it's instant, right? So we need to think about different concepts, how we deal with that, from an interest calculation, from all these aspects have an impact.
Based on what we've just discussed as well, though, but the end consumer still, to your point, the transaction gets booked. So for them, it still happens.
Exactly. That's
fine.
You're totally right, and that's why I'm saying it's a long run, because for the consumer, they do not notice today a difference. They have it instantly, the money booked on their account. They see the money, they can use it, even if the settlement is happening later on in a bank on a different moment on the time. So there's no benefits to bring to the customer. So when there's no benefit you bring to the customer, you cannot charge them. You cannot have any added services for them. This one. So what would be the incentive for the bank to go to the 24 settlement if you do not earn from the customer side? On the other side, you have to bring a lot of new cost on the 24/7 operation. If you have a good treasury guys, a good team who can ensure today that they have enough money and liquidity in your accounts with the target, with the tips and with the EPA, I don't think that this could change very quickly.
I think we have to, right? It's a given. Settlement is 24/7 at the moment. And maybe we, right, as a bank, when you don't send out too much, other banks can send you a lot. But if you have big spikes out, you don't receive money from other banks, you need to be able to cover that, because in the end, then the customer payments will not be able to be made because we have run out of liquidity.
The money. But the ultimate target is actually, we are talking about only instant payment in Europe. But the target is to have instant payment operability with different market infrastructure. And then that moment, definitely this 24/7 in liquidity and settlement instantly will really play a good role. Currently, not, but in the future, definitely. And in the end, this is what we want to achieve. Exchanging money in Europe is okay. I mean, we have no issue. But I want to have the same customer experience sending money in US. I want to have the same experience when I'm sending to the East European countries or to the Asia.
But absolutely seamless in an ideal world.
Seamless, but let's first fix right our domestic payments. right? In Europe, you could argue it's already kind of cross-border, as you know, right? Because all difficult, but still, the friction, right? The rejection rate for instant payments is very high still if you compare it with the classic credit transfer at the moment. So before we even get to a seamless, right, cross-border, let's first fix our seamlessness of our domestic market.
Absolutely.
Yeah.
And then, so talking about this,
Yeah.
we're talking about real time, which is
Yes.
always a big subject in payments. Then we get into real time fraud. And how do we address that? Can we even address that? Is it a losing battle, or is it something we have to evolve with rapidly?
Well, I don't want to be, how should I put, to panic, but I heard in a conference from some kind of guys who are working in it one, that to a bank or to the actors adapting to a new fraud, it takes 3 months, while the fraudsters are below 1 month to change the way of how doing frauds.
Yeah.
So I don't say that it's a lost battle. I think that there are a lot of mechanisms in place which we can use. There's still room for improvement. Nevertheless, it is an issue which we as a bank have to face it. And with the new payment service regulation, which is up to come in the next couple of years, will bring a new burden because they will put the liability on the banks. So whenever a fraud is happening, you as a bank have to pay it out first,
Yeah.
and after that to ensure that you can get rid of the money. So definitely fraud, it is an issue. It is an increasing number of frauds in the last couple of years exactly into the instant payment.
Yeah.
And we are working on identifying different methods and different tools in order to proactively ensure that we do not execute the respective payments.
Yeah, I think that's a key point. I think a lot of banks fight on their own, so to speak, right?
Yes.
With their data, the fraud. And I see more and more initiatives that we benefit from each other's data. And of course, we have to be very careful, and with all the GDPR rules in place, what we can share. But we have now some good initiatives ongoing where we leverage about each other's knowledge about the involved parties, about history of the same payments, to make a better decision if a payment is potentially a fraudulent payment. So I think that's improving and needs to improve more. But I think there are good things happening as well to fight it better. And I think with the come of AI in this area as well, I see also there are a lot of initiatives to, again, learn from historical data to predict basically what could go wrong in the future, to say something like that. I think, so I see some points, but it's one of the main topics that we need to address as a banking community.
Yeah, and obviously fraud has existed since money existed, really, and people trying to steal it and get it through unpleasant means. So to your point, it needs to shift from traditionally reactive way of this has happened into more of the predictive. Or if it is going to be reactive, the window of time that fraud is successful is reduced significantly to protect it.
Yes.
Okay, we've had a really good chat. What I'd say, ask from each of you is, it's only halfway through day one. Are there any key takeaways you had from MoneyLive so far today? Michael, I'll go to you first.
I'll start. I spoke with a number of colleagues from other banks and others, and we are all in the same boat. That's clear. We are all are the same challenge around this instant payment regulation. I think it's really good that we can here catch up and discuss that, but also think more collectively how to approach our central banks, our regulators with the same voice, basically. So that's one of my missions here, to discuss with a lot of colleagues to see how we could, really make clear to our regulators what challenge we have at hand.
Fantastic.
Yeah.
Cristian, yourself?
Well, I'm very happy noticing that payments, which I'm responsible for, it is still a topic to be discussed. On many sessions, we have these payments. I'm happy. However, I also noticed, I also discussed with a couple of different colleagues here about other type of business, not only payments, lending, trade finance, even I saw some colleagues from the crypto. So I'm really presently surprised about the scope and the coverage of the event. It's bigger than expected, to be honest.
Yep.
And I'm really happy to be here. And definitely in the next couple of days, I will meet several people in order to expand the network, because in the end, this is the beauty and the target of such events, in order to network and exchange information, in order that together as a community to really bring the environment and the industry further.
Fantastic. And then one final thing, the October drop dead date for ISO compliance. Do you think it's going to happen, or do you think it's going to move?
It's going to happen
Okay.
because the date will not change. Just what will the regulators do to enforce that date? That will be the challenge to see.
Okay. Cristian?
Well, 99% of the activities, to be honest, are already done. There are small parts which are still up to be, let's say, finalized. We see that the markets which are not explicitly around us, they're not ready. So I'm still expecting that even after the end date, a lot of banks still be kept in the old business and to receive payments from the old format. So that's why the regulator might not say we will postpone everything, but will allow further to be used the old format in order to facilitate the communication and exchange the information, because this is the final target, to support and to offer services that the payments are running seamlessly as much as possible, and not just to be from regulatory perspective or the market regulatory perspective there.
Fantastic. Gentlemen, thank you very much. I appreciate you coming off the stage and then jumping straight into a podcast. So enjoy the rest of the show.
Thanks a lot.
Matt, that was a great episode, and I gotta tell you, I'm worried that this might be our breakup letter. Is that?
I don't need you anymore, Fred.
You found another suitor? Oh my goodness! I knew I wasn't going to last long, but I thought I'd make it through episode 4. Very well done. And how was that as an experience?
It was really good. I think because we came straight off the panel. So the guys were like, oh, we're doing this now, are we? Straight away. So it was fresh in mind, which was good. And we talked about the 10-second rule, concerns which everyone has at the moment about bad actors and fraud based on real-time payments, especially the account-to-account thing. That's obviously huge right now. Verification of payee is obviously massive, which is just a prerequisite to maintain you keep the bad actors out and that you reject any payments or don't even let them be kicked off started. Bulk payment and liquidity were the other two elements that were discussed quite heavily in this. And then, the reality of managing real-time liquidity via the ISO format is going to be a game changer for people on real-time cash management and value-added services you can build on top of that.
Well, it's going to be a necessity, right? Like, I mean, it's not a if you want to kind of thing. Like it's going to be a necessity, right? So
absolutely. And I think those that one of the things we discussed as well is how ready people are going to be. They're ready to accept, as in, it comes through the front door, it goes out the front door in the right format. But how deep into the organization as part of the journey can it penetrate? That's going to be the really interesting bit. And I suggest quite a few people are going to have orchestration layers. They're going to manage that in the interim while they get their back office sorted out.
Yeah. I say this with every episode. I love that we get to work with people that are just so deeply ingrained, people that are so knowledgeable of the space, and that they've seen the changes and the shifts, and they know what's coming. But it's an incredible opportunity. It was a great episode, Matt, and I look forward to getting back into us doing our thing for the next run. We've got some good stuff to talk about, and we have a lot of great guests lined up. So.
We've got quite a lot booked in advance at this point, which is great. Again, we're always soliciting feedback. Please reach out to us at the Banking Bytes email address that we've discussed before. That will also be in the intro that we scheduled on LinkedIn and other places. So please do reach out to Fred or I, either on LinkedIn directly through direct message or to the email address bankingbytes@endava.com.
We want to hear from you. We want to make sure that the content is meaningful and hitting the right point, and we need your feedback. So please send us an email. We would love to hear from you. And Matt, I think that's a wrap for this one. Yeah,
100%. That is a wrap. We look forward to seeing you all on the next one.
Thanks for doing all the work, bud.
No problem. As always.